Hi everyone, welcome back to Risk Biscuits. I'm Michael, your host. Thanks for checking in. I've got a great show planned today. Bit of a special guest, a little bit different than our normal kind of trader series. The semiconductor specialist Doug O'Loughlin online today from Fabricated Knowledge, who's going to break down semis for us and give us some insights and figure out what's going on around Nvidia and AI and all the sort of exciting space that's happening at the moment. G'day, Doug. How are you?
Good. How are you? Thanks for having me on, Michael.
Yeah.
Yeah, here to talk about semiconductors. There's actually quite a bit to talk about.
Yeah, absolutely. Before we get into it, I'll just share something on the screen just to sort of cover off on a few bases. Look, obviously, this is just a general discussion. It's for entertainment purposes only. Doug and I are just chatting. We're not providing financial advice. Past performance is not indicative of future performance. If you're looking for financial advice, let's go somewhere else and seek it. But if you're interested in just listening to a couple of guys have a chat about semiconductors, then yeah, you're in the right spot. All right, so Um, maybe just to start, Doug, like obviously I've interacted with you a little bit on Twitter over the years and that sort of thing, but if you can just give us a bit of background in terms of, I guess, how you kind of started in the industry and then how you became interested in semiconductors and kind of have ultimately ended up where you are today.
Yeah. So my background actually originally is a buy side analyst at a fund in Dallas, where I was like born and raised. Really great job out of college. Can't complain. Learned a lot very quickly. And pretty much what happened was I really wanted to do this giant sabbatical thing that I planned out for quite some time. And so I left my job in the middle of 2020. The sabbatical pretty much like is a long, 3,000 mile like long hike from Mexico, Canada, the United States. That started April 15th of 2021. So I had a little bit, about, a few months to kind of do something. And I was at home bored like everyone else was. And I was really obsessed with semiconductors. So I started writing about it quite a bit on Substack. And so I was definitely one of the first to catch the wave of Substack, one of the first paid subscriptions to my understanding. And I exclusively thought that, hey, semiconductors are going to be a giant thing, mostly driven by the massive new wave in AI. That prediction panned out better than I could have ever freaking imagined, to be quite honest with you. And now here we are. We're in, the AI go-go market, to put it one way. And it's been and so pretty much what one of the things I really was focused on was when I was a buy side analyst, I was like doing work on semiconductors, and essentially I came to the conclusion that there was like a giant sea shift change in how a semiconductor was made and how much differentiation would come because Moore's law was ending. And so Moore's law in some ways is the end of CPUs, and a lot of other new avenues of competition happened whenever Moore's law ended. So that was what got me really interested into it. And then I've just been writing about and covering the space since. So yeah, I there's a lot of ways we can talk about this episode. I have like one of my favorite analogies. Maybe I'll just use that to like do a high level overview, and then we can talk about Nvidia.
Sure, sounds good.
Yeah. So I guess in the Dummy's Guide to learn about semiconductors, the probably the best metaphor that we can use is like I like to use chefs essentially. The fabs and foundries, which is TSMC. Think of them as like a contract chef. Like in a lot of ways, they're working like a ghost kitchen. No, they're not selling anything to any customers. They're just cooking as a service. And obviously, that's a very important business. But if you think about it, there's a lot of different parts that go into cooking and making a product for customers. And that's the foundry and fab side of things, or the chefs that make all of this. But then there's also the business that I first fell in love with because I think they're awesome businesses, Semicap. And those are the tools that essentially the chefs use to cook up a meal. And that's like the pots or pans or the burners or all the equipment and stuff that goes into making a recipe. And then if you take a step back, you're like, okay, what are they cooking? Someone is designing the recipe for the chefs to cook using the tools that they bought, and that's in modern terms, that's the fabless companies. So Nvidia, for example, is a fabless company where they don't actually make any of the semiconductors; they just design it and have someone else make it, and they're focused on marketing and selling the solution and product. So that's like the super high level overview with like analogy of all the different play parts of how these companies work together. But that's like my 2-minute guide to the semiconductor industry. So
Yeah, okay. That kind of makes sense actually. And then so one of the things I've always found interesting about semis, and I've tried to get my head around the space a few times, and it's obviously complex. It's just is that value chain of the various components that are all coming together and trying to get a sense of who fits and who sits where in the industry and who's capturing the most value. So like historically, I mean, where's the real sweet spot? Is that semi cap space that you've been talking about?
yeah, so semi-cap, so you have to think about it this way. Semi-cap is like owning the industry and just making the chips and how much more chips are made each year. Okay, so that's like the bet. They're extremely stable businesses. Now they're cyclical, but the market share between them is extremely stable. So you're not going to like lose out the big wave. It is, they are selling all the pots and pans, and maybe they use different pots one year, then next year, but at the high level, they're still using all the same stuff. I think that that's a really good broad base bet for semiconductors. But there's a lot of different layers to this, right? One of the big stories recently is like one of the chefs is kind of like out of business, and they're starting to get better Intel, but TSMC has definitely put them in a much lower peg than they used to be. Now, think about it this way though, these guys are just service providers. So even when their customers do really, really well, for example, like Nvidia, Nvidia is making a giant margin on top of what they spend at TSMC. TSMC's revenue is only maybe 10%. 10% is Nvidia chips, but like Nvidia's entire revenue pool is approaching TSMC's, and that's because they have like a really boomer bust. So the fabless is which the companies that buy the chips from the foundries, those guys have the biggest win and loss profile. So when they win it all, they win it a lot because they don't spend any capital. But when they lose, you're like, what is this business worth, right? Like if they can't make a good recipe, what's the point of this thing at all? So those at the end, there's like this relatively stable industry of the foundries and fabs with really stable suppliers, meaning the semi-cap companies. And then all the other companies at the end kind of fight it out for market share. And those are where you can see really drastic market share changes. So I think that the entire index, honestly, if you're like, hey, if you have to just own some semiconductors, make it simple and just like, own an ETF, honestly, there is a lot of correlation between the entire space, especially, and then semicap in particular. I don't even think there's much value in trying to pick stocks. Now, occasionally there is some benefit, but the difference between ASML and applied materials over, 10 years, like it's a big return difference, but like they're going to be all up together or all down together. That makes sense.
Yeah. Okay. Yeah. Yeah. And so, for the lay person that wants exposure, take a broad-based ETF, and then, at least you've got exposure to everything. And as the industry does well, you'll do well, and at least you're, diversifying your risk, which makes sense.
Yeah. Yeah,
So,
especially with how cyclical things are. Like I cannot express
yeah,
how, because like, I think everyone's talking and excited about semiconductors right now during this point where like we're in the beginning of a massive upcycle. But like don't forget what happens with this is that like, okay, like Nvidia, and well, maybe this is like a good transition to Nvidia, is like they sell all these chips, right? And then these customers are like, man, we cannot get enough of these chips. So what do the customers do? They double and triple their orders so they can get like half of the orders, right? So they can get it quicker. Now, if everyone does it at the same time, what happens is everyone shoves orders at the same time. Then Nvidia and the foundries, they all over order, and then some blip of demand softens and slows down. And then what happens is these companies come crashing to earth. Now, that's like the historical basis of semiconductors, and truly, it's the same as it ever is. That will be the basis for Nvidia whenever their revenue slows down. It's going to come not slowly, but all at once in a giant crash. So I think there is definitely some prudence in terms of like, look, SOX itself has outperformed the Nasdaq for quite some time now, and it probably will continue at this rate. And I think that the diversity means that you don't have like SOX, the index or SMH or whatever ETF you want to do is like, yeah, the drawdown could be like 40-50% or something, but we're not talking about like the 90% drawdowns that some of
yeah,
these semiconductor companies have, because it's really brutal. Like like for example, people are shitting on Micron on Twitter right now because they don't make any free cash flow. That's true. There's actually really good reasons to be long Micron, but it's not the current dynamics. But right now, Micron is burning like $1 a quarter or something like that in book value, and that's not a good business. Like, they went from making 10, like I think their price to earnings went from 5 times to negative. And so there's this giant whipsaw effect in semiconductors that can make it a little dangerous. If that makes sense.
Yeah. Okay. And I got first interested in semis in like sort of the COVID lockdown space when everything was flying and semis were really popular, and I had some exposure through one of the ETFs and it was doing really well, and I was sort of trying to get my head around it. And that's actually when I stumbled across your Substack and subscribed for a while and was trying to sort of pull the industry apart. And to be honest, it was just I didn't have the time or the headspace to really learn it properly. And then we had this like really cyclical fall off where all of a sudden semis were the worst place to be and the world's ending and blah blah blah. And then all of a sudden this AI thing kicked in and we're back to the races. And it seems as though semis are the only place to be in the market.
Yeah, at this exact moment. I mean, to be clear, I want to put some warnings out. I'm literally going to write about this. I think the semiconductor relative outperformance compared to the Nasdaq is at a five is like the best 5 day period ever. It might be the best 10 day period ever. It might be the best 15 day period ever. So at this exact moment, it is like as hot as it's ever been. And I definitely want to put some caution for that because it's like, look, it's roaring really hot, but like I really do think that the only way you can invest in AI in public markets is semiconductors. And so people are really looking for demand for big new growth markets. And it seems like the only real place where we're starting to see these like 30, 40, 50% revenue CAGRs is semiconductors. And these businesses are really good as well. Like, for the fabless guys, we're talking about 70% gross margins, 40% EBITDA margin. So like, they're really amazing businesses in a way that SaaS never was. It makes cash. And that's kind of rare compared to historical bubbles is like, and I mean, we'll see where this ends, but I mean, Nvidia, people keep calling it a bubble. And now after like the 60% year to date run, it's become a lot more expensive. But at the beginning of this year, it looked like it traded 25 times forward earnings and, was making something like, $50 billion a year in EBIT. So like these are real businesses putting out real cash. And I think that that's something that's exciting, but also there's a huge, the cyclical component is really real. So
Yeah, yeah. So then talk a little bit about this whole AI thing. So obviously AI is the sort of the hot topic at the moment, and everyone is sort of racing as fast as they can to either get exposure or ramp up their exposure and that sort of thing. What's your sort of sense in terms of how much of it's hype and how much of it's real, and if it's a long-term kind of secular shift?
man, that's a very expensive question. If it's like a $10 billion question, if I knew the answer, certainly I feel like I'd be on my yacht somewhere. But realistically, I think that we're at a weird crossroads with AI, right? It's clear that the technology is revolutionary and it will meaningfully impact a lot of our lives eventually. But just like every other giant new technology, there's a really good book on this called I think it's Financial Capital and Technological Revolutions. It talks about how every single big new technology almost always has a capital overbuild bubble in front of it. We're talking railroads, canals. You can make the argument that like the Indian shipping companies were this. Obviously, the internet is a good example. There are these massive overbuilds that happen for stuff that's to come. And to be clear, I think that there is clearly revenue and a business model on the other side of this. Now, what we're spending today, is that going to be justified? I don't know, but I do think the thing that I feel very strongly about, you have to take like another step back, is that semiconductors within this picture is extremely secularly advantaged, right? I don't
Okay.
think people appreciate that AI is not this little demand driver, but it's one of the biggest, most impactful demand drivers semiconductors will ever see. So let's take an example that traditionally happens, like you and me doing a Zoom meeting. They're taking the data in from this. It's converting it into a signal. It goes to the internet, then it essentially puts it out on your end. That is just manipulating and moving data from one place to another. What's happening at these models is that it's taking, let's say, a picture, right? And it's doing, billions of calculations. We're talking orders of magnitude more compute for each time you ask a query into ChatGPT or to generate an image. these are things that are in, if we were to put it in just one CPU, your computer can't even do it. Like
Yeah.
your at home computer has no ability, right? Like the typical web server, for example, is pretty much a souped up version of your at home computer that is delivering content in the cloud to customers who visit your website or doing some manipulation. The current computers we have are nowhere near strong enough to be able to do this. So that's where this huge new AI demand driver is from, because um, what we're talking about here is they're quite literally training these models with the entirety of every bit of information that has ever been collected from the internet, from any, all the PDFs ever, all the research papers. They're trying to make as much data as possible to train these models. And like we're talking about, like, I think the entire, like, okay, so for context, I think the entire bandwidth of the entire internet is probably lower than what is happening in one or two of these like giant data center GPU farms.
Yeah,
So
right. Okay.
they're processing like an order of magnitude more compute than anything humans have ever done. And that's going to be, and like the thing that's also really big deal about this is the entire plan for the semiconductor, for the chips, or for rather for the models to get better, is to make them a lot bigger. GPT-4 was like almost 100 times larger than GPT-3. I don't think GPT-5 will be 100 times larger than GPT-4, but like, it will be orders of magnitude larger. And what that means is, even though the chips are getting faster, you need a lot more chips. And we're talking about tens of thousands of GPUs put together into a data center in order to make one of these models. So if these things start to be used in our everyday lives all the time, training and inferencing them, and even inferencing takes a lot less. Think about it this way: one is to create it, the other one is just to run it, if that makes sense.
Yeah.
Just to run one of these models takes hundreds of thousands of dollars just to be able to do it. This is a totally different new world that we're talking about when it comes to semiconductor demand for AI.
Yeah. Okay. All right. And then it probably hasn't to someone like yourself that follows it, but it feels like this whole AI sort of revolution has just kind of popped up and appeared out of nowhere. Has it come like has it come earlier or faster than people have expected? Because to a layperson, it just seems as though it's just appeared all of a sudden.
So I think so if you go back in the marketing decks of all these companies, they've been talking about this AI revolution for a long time. I
Okay.
don't think that it's come from nowhere. I think the thing that has really shocked everyone is pretty much we found something that worked in a way that we didn't foresee. Pretty much the answer was to make the models bigger. There's a really good article about this called The Bitter Lesson, where they talk about how like the answer at the end of the day to make better AI is just throwing more computers at it. And essentially, the more computers that we've thrown at it, the better these models have always been. And I think the thing that what happened is they realized, oh my God, there is a model that becomes superhuman and becomes better at us than, manipulating words or making rhymes or something or doing information processing. But the thing is, it just took, 100 times more compute than we thought.
Yeah.
But when they realized that not only did it take 100 times more compute, but we can make it even better, meaning that there is a roadmap for truly beyond superhuman performance. And all that takes is billions and billions of dollars of semiconductors. So, um, and it's really exciting when a new technology comes around. Now, to be clear, maybe the business models will be hard to support this, but when there is a newly true revolutionary idea that has come around, and the companies that are pursuing it make a shit ton of money, it's pretty clear answer what you should do. You should spend a shit ton more, and if you're the first one to make it, maybe you can start to justify all this.
Yeah.
And I think that that's where we are today. Is that I think the thing that really came out of nowhere. I've been like literally. I have a piece that I wrote in 2020 called GPT-3 and the writing on the wall. Like it literally is like, oh, GPT-3 is big. The future GPTs will be even bigger, and so AI demand is going to be ginormous. And like that prediction came almost perfect, right? But the thing is, I don't think people, like, I was completely shocked. GPT-4 and GPT-5, we're talking about an order of magnitude more. Like we're talking about people are like $250 billion a year is pretty much what has been spent on the annual data center each year, essentially. And the plan now is essentially to spend as close to as much of it, even if not even more, to replace all of it to make a new infrastructure completely focused on doing these AI tasks. And so I think that that's where it came from. Is that one, we realized it could get a lot better if you can make it a lot bigger, and then the biggerness became this huge windfall for semiconductors that we didn't expect.
Yeah, okay. Yeah, fair enough. And then so let's talk Nvidia for a second. So obviously it's the darling of the market at the moment.
Yeah,
Its chip is the best chip at doing at these
sort of. You know what's actually funny is it's not right now.
okay.
AMD's chip is a little bit better silicon for Q1, Q2, and Q3 of this year. But the thing is, in next Sunday or next Monday, I think they're going to announce their new chip, and that should completely blow away AMD's chip. And even AMD had this like really good chip, but the difference is AMD doesn't have the ability to deploy it at scale and didn't have the supply chain to ramp to $100 billion. Essentially, AMD is just selling, $4 billion a year this year. So, that's
Yeah.
obviously a really big and real business, but we're talking $100 billion for Nvidia. So yeah, but yes, Nvidia is clearly the 800-pound gorilla in the arena. And the thing I would want to say that this is completely unexpected, but Jensen Huang might actually be one of the most far-reaching driven founders ever, because he's been talking about how accelerated computing is going to, completely revolutionize everything at these conferences since like 2012. He's been talking about this for a long ass time. He has been putting his stuff, making the entire ecosystem prepared for this generational shift in demand for AI, and pretty much the bet has finally come due. So and in that process of putting so much ahead in order to make sure that they like have grabbed the future, there's a lot of aspects that has made them a really like formidable competitor. Not only do they have the best chips, I wrote an article about this called I don't remember what it's called. It's like Nvidia, like it talks about the three-headed hydra of Nvidia. Okay, this is how I think about it, because they have the
Okay.
best GPU. Okay, they have the best, like CUDA is this like special software that's being used to train all these models, and all these models are being done using this as a reference design. And so even if they want to use another GPU, they have to change all the software in between. So that's become a giant switching cost. And last but not least is the networking, because all of all of these problems that we're doing in the data center are so big that you can't do it on any single GPU. You have to do them on hundreds, if not thousands of GPUs. And so that's where there's been a huge differentiator, is the network aspect of the business. And so not only having the fastest GPU, but having the fastest cables to connect them together to work on these even bigger problems is where Jensen has absolutely destroyed the competition in as well. So there's these three problems that you'll have to solve at once. Because think about it this way, AMD made a better chip for like 3 quarters, and then Nvidia is going to, fix that. If AMD came out with better software and a better chip and better networking all at once, we would be talking a different story. But I don't think they can. And that's where I think Nvidia has become so impressive. So you have to come out with all three better at the same time. So it's like a hydra, right? Because you cut one off, you beat it for a little bit, and then it'll regrow and it'll be better than you. And so each year you're going to have to compete against multiple fronts. And I don't think any company in the world really has the resources to do that. Even the hyperscalers, which I think is where a lot of people think that Nvidia is going to get owned one day by the hyperscalers, because Microsoft and Google and Amazon and Facebook are these huge companies. But realistically, building a chip is really hard, and none of these companies have really built like really cutting edge chips, and Nvidia has been doing it their entire lives. I think that there's a chance they can compete, but we're talking 5 to 10 years from now. So Nvidia today has just really put so many like concentric moats around its business.
So it sounds like from what you're saying that Nvidia, although your earlier comment about there will be a demand cliff at some point, but Nvidia has made itself more of a secular compounder than a cyclical because of these moats. Is that a fair comment?
Yeah, I think so. I mean, there will be a cycle someday, but in this moment in time when things are extremely secular, they've done an amazing job at creating real differentiation. Jensen will say this, that he will never compete in something that he thinks is undifferentiated. So everything that Nvidia has intentionally has an end goal in mind. Like there's a competitive strategy reason underlying the reasoning for those business decisions. One of the things I want to talk about actually that I think is maybe a little underappreciated is like recently, I'm sure you might have heard of these GPU clouds called CoreWeave, or I'm thinking of the other one. I can't like Lambda Labs. And all they do is they make GPUs. The reason why they exist, honestly, is because Nvidia took this reference design of GPUs, like this GPU cloud, and they like gave it to them, and they're like, here, you guys figure this out. And I think by doing that, one, it created like great business models for them. But I think NVIDIA made the reference design and sold every aspect of the reference design because one, it creates lock-in for their products, but two, it also creates competition for their competitor for their customers, because their biggest risk is that the customers will have so much money that one day they'll be able to like make their own chip and cut NVIDIA out of the system. And what Jensen is doing is he's kind of like lowering their competitive power by making the hyperscalers, in this new GPU focused era of computing. Now there's new entrants for the GPU clouds, and that's like, I think that that's a way to limit and tamper the future competitive threat. So that's like an example. Like, dude, Jensen is fucking like literally playing 10D chess. Like, he is so smart, and he really has been super ahead in almost every single way when it comes to competitive advantage. And I think, it's probably, I think right now or soon is probably the widest competitive moat they'll have. And I do think that every single day has woken up and wants to cross that moat. But I think that's going to take a long, long time for it to shrink, because even if it's shrinking, they're going to be making a ton of money at the same time, and they're going to have the opportunity to reinvest and maybe widen that. So I think that
Yeah.
that's a huge thing, because, and like, this is not a comment on the valuation, but like, I don't know, man. They are fucking murders competitors, and I don't see anyone coming to take their crown anytime soon. Maybe Google has a very special stack, if that makes sense. And honestly, if you're talking about stocks right now that I think is very interesting, I think Google is extremely beaten down. A lot of people don't think it has an AI bet, but realistically, you should think of the Google universe, as its own completely defined universe. They own the model, they have their own hardware, that like the TPU, and then they have like their own teams to support it. So they have this totally vertically integrated stack. Now the problem is, how will Google make a good product to compete against other people? That's like, I don't know. Google hasn't been the greatest product company recently. And then there's the other side of the space where there's Nvidia, and they're offering their software and hardware to anyone. So they're much more open, but at the same time, because they're not vertically integrated, their customers have to pay a lot more. And so there's like a cost consideration. But if
Mhm.
Nvidia can keep innovating, and a lot of people will still keep using their products, there's a real chance that they'll win it all. So Google is like maybe the only counteract to Nvidia, I think. But
Okay.
they have like a much more full stack solution.
Yeah. Okay. Interesting. Yeah, because you're right. At the moment, Google's hated and seems to admit, everyone thinks it's missed the AI boat. But for a long period of time there, Google was kind of seen as they have deep mind and they've been spending a lot of money and doing a lot of work for a long period of time. Obviously, they had that sort of, recent sort of hiccup with their model and
with the
that sort
with
of thing.
the image generation, but at the same time, they also released the biggest, like, the Gemini 1.5 model has this like 10 million, or I think it's 10 million context window, meaning that you can put multiple entire books into it, and it can use that as its prompt to then train from. That's something new and legitimately innovative. No one has that product in the market. I think it's more likely than not. I don't think Google will be, the leader, but I think Google will have a real part and a real shot in this ecosystem. And the only reason why, and like not the only reason why, but you should look at maybe the market dynamics right now, because I think one of the reasons why Google is beaten down is that there has become this giant anti-momentum trade. Like I literally am doing some work on this right now. Momentum versus the S&P 500 is having like the best 2 month period ever, essentially. And has like really run away this year. And like if you look within that, semiconductor is extremely high. And like one of the least like weighted aspects, so like the momentum winners keep winning, the momentum losers keep losing. Large cap healthcare companies like UNH, Google, Apple, Tesla, these guys are extremely low on the momentum. And it's like one of the reasons why they've really diverged from the rest of the universe. Now, I think that some of it's justified. Some of these stories have legitimate problems, but I think that what happens, especially when you invest when it's like a factor first, is that it overshoots to the upside and to the downside, and then it corrects. So it creates these drastic overreactions. And I think that Google is having one of those drastic overreactions right now. I think that realistically, let's say in 12 months from now, their competitive advantage will, at least the perception of it will meaningfully improve.
Yeah. Okay, that's fair. And then, so just back to Nvidia and their chips, like why are they so much better than everyone else at making these cutting edge chips? Is it just that they've been doing it longer, or
So, so yes, I mean, so there's okay. So the GPU market actually, there's Nvidia got founded in 1997, I think, and they didn't really have their really first amazing successful product, I think, until 1999. But whenever they started, actually, they were an entrant and a challenger that eventually disrupted. I think it was SGI that they absolutely crushed the incumbents. Um, Now, what is a secret sauce that makes their design team so much better? I don't know, but their continuous outperformance is very clear. The far and away number two in this market is AMD, and AMD is starting to have a little bit of a GPU story as well. But I think realistically, Jensen has been really executing at the front of the pack for a very long time and has been very thoughtful on how much margin he can make out of the business, as well as getting. I feel like not only is he makes the best chips, he also managed to make like way more profit than his competitors. So I think in the long run, we should expect the market dynamics because Nvidia has been in the lead for a long time. I think we should expect probably 70-20, like Nvidia AMD when like 10% some other competitor or something like that. That's like what I think is going to happen is that Nvidia has been the incumbent, and there's a lot of things like, for example, I talked about CUDA earlier. In 2011, they pretty much gave away the CUDA software for free. They went to
okay?
universities, any university that they would talk to, and they're like, hey, you're a researcher, you're doing accelerated computing. Okay, well, we're going to give you this software. All you have to do is buy our chips. Hell, we'll even give you some of our GPUs so that you can figure this out on your own. And just tell us about your problems, and we'll help your problems work better on our GPUs, and we'll do it for free. And so they did this for like a decade, man. They gave away the software. They worked on all these problems, and then they got academia before it even became mainstream. So all these research projects, all these like, hypothetical AI things, all these like AI researchers, when they're working in a PhD, they were all using GPUs and they're all using CUDA. That's all they've ever known. And so that's one of the things that they did, that they made an ecosystem around their products and they gave it away for free for a long time and became like the industry standard as to what is like the industry standard that everything is trained on. And that's one of the reasons why they have such deep incumbency. Is not only do they have the best chips, but they have everyone knows how to use them. And so that's been a huge part of their continued success as well.
Yeah. Okay. Yeah, it seems like from the outside looking in, the story's almost like they sort of stumbled across this by accident, but that's really not the case at all. They've been working on this for a long, long time.
Like in 20, dude, I'm telling you, there's like these conferences where Jensen is like, accelerated computing is the future. And you could take that conference, that call, and put it in 2020, and everything he said would literally be like, would line up essentially. He's been very
Okay.
far forward thinking in this. So it's not a surprise, man. This guy's been rooting for this, planning for this, buying companies for this for decades. And I think that, his bet was always a good bet, but I think it's probably more in the black than he thought. And now here we are, right?
Yeah, okay. Fair enough. Yeah, cool. So then where to from here? Like, is it just Nvidia's the only game in town? Are
So
we
that's a really hard question. There's actually been a lot of a broadening of the stocks. So I'll actually give a high level overview of the like semiconductor stocks,
okay?
or like the semiconductor and data center guys. So
Cool.
um, high level, there's AMD, who's going to be like the number two GPU guy. Broadcom is another company because they're selling the TPU to Google, and they actually just said on this last earnings call that like came out today. I was listening to it before this. Before this is that they expect $10 billion in revenue for the TPU. So they're probably the second biggest AI accelerator company. And so they're probably number two. Number three is AMD. Those are just the semiconductor companies. But remember, I talked about the networking before, and it's not just about having a GPU, but it's like having the fastest wires to connect many of them all together. That's another space too where people are starting to compete in. Now, Broadcom is a big competitor there, but so is Marvell, MRVL. That's the ticker, and so that's one of the companies that some people have maybe decided that's an AI about beneficiary. And then Arista Networks, who exclusively sells the transceivers, so the plug-in cables as well. That's another company that has benefited quite a bit from this.
Okay.
Now, I think that those are really relatively well known. I think there's some off the beat stuff like Alpha Wave. I'm not even begin to talk about them. But then there's stuff that I think is really interesting is like there was actually a really good piece that came out today or maybe yesterday talking about how even within data centers, there's a lot of variability. Like you want to like some people will have two data centers, they have the same specs, and one is always breaking and one is always working. And so there's this new infrastructure that's going into supporting these data centers to make the GPUs a lot better. And I think the one that people have really harped on, and I think is going to be a big universal new, like pretty much is liquid cooling. So in the past, what happened was we put these GPUs into a data center and we just use air to cool it. Now we're going to start using liquid cooling to the chip, and so that is going to cost a few extra $1,000s to do. And so there's a company VRT has become quite popular. There's also SMCI, which is kind of the rack maker. That's like a very popular. In a lot of ways, they benefit from volume specifically. So there's a lot of companies that are starting to make a lot of money on the incremental new GPU servers. But I still think that the one who's going to make probably, 10 times much as everyone else combined is Nvidia. But we're starting to see a broadening out of the names. So
Yeah, yeah, okay, cool. And then so with everything that's happening in the space, and let's assume that the CapEx spend out of, Google, Apple, Amazon is going to continue at the levels that it is at the moment, which means there's more demand for chips and that sort of thing. The semi-cap space, is that going to just be the ultimate beneficiary because they can just sell more into
um,
this growing market?
some people think that, and to be clear, semicap as a space is up like 40% year to date. So yes, to a certain extent. I mean, these are really good businesses. You have to think about like the entire semiconductor space, not so like Nvidia makes a shit ton of money because like, they essentially buy a wafer for like I don't know, I want to say like 50 grand and they turn around and they sell it for millions. Like that's one of the most drastic ratios of profit in the entire semiconductor industry. But there's also memory companies are starting to make a lot of money. SK Hynix, very, very rough to buy it as a retail investor, but HBM is this like new type of memory that's become very important for training these models because it's not just having a good GPU, it's having as much memory to hold all that data together close to the GPU. That's become a big bottleneck. So that's another good example. But the entire semiconductor space is definitely going to benefit. And so I think the thing that's a little tricky with the semicap thing is not only does semiconductors are getting harder to make, and that's been a very beneficial thing for semicap. But I think it also we need a lot more volume too. And right now, it's a relatively small part of the pie. So I think it's going to be a little bit more time before that happens. But ultimately, the semicap companies will always benefit. They're truly amazing businesses, man. Like we're talking 100% free cash flow conversion from net income. They buy back shares. If you go look at like any of these companies, they have been making 30-40% revenue share CAGRs per year for like a decade. I mean,
Yeah, right.
these are 10 baggers over a long period of time. Like I'll pull up like Lamb Research, for example, has gone up 5x over the last 5 years. Applied Materials, probably something very similar over the last 5 years. Yeah, 4.5. ASML, which has been kind of a bigger darling, but about 4.5, 5 times. So like in the last 5 years, these companies have gone up 5 times. I don't think it will be quite as good as that, but if you look over a long period of time, these stocks go up, man. And so those guys are really well beneficial. They're going to be big beneficiaries over a long enough time.
And potentially kind of a safer way of playing the exposure to get away from the cyclicality of the chip, the fabless
So,
operators.
so yes and no. Okay. Here's the
Okay.
problem. They are just as cyclical, right? Because The only reason why they make a lot of money is because they sell a lot of tools at the top of the cycle. And what will happen is when they stop having capacity, we'll have like 20, 30% down years. Okay.
Yeah.
So they are super cyclical, but the difference is I don't think you ever have to worry about their competitive advantage. Okay. These businesses are like pretty much as close to monopolies as any of them in the semiconductor space. They're probably the strongest monopolies too. And so, yeah, they will definitely have bumpy rides, but in terms of, hey, do you have to worry about if Nvidia's chipper is winning or losing? Nah, you don't have to worry about that at all. Their moats are based on physics. They are like the only companies that are able to place singular atoms to make these chips. And so these are very differentiated moats. And so I think semicap is a really good way to participate with much better business models. And right now, at least relative to the rest of the space, much better multiples. So
Yeah. 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 I mean, Nvidia sounds like an amazing company, and the more I talk to you, the more I realize how amazing the company it is. But it's,
it's 2
sort of,
trillion,
yeah,
2.2.
yeah,
It goes up every day, man. It goes up 3% every single day. It's very hard for anyone to rationally be like, you know what, how like and I was very bullish into the beginning of this year for Nvidia, and like I am a lot less bullish now because I'm like, Jesus, guys, like we have some big numbers to overcome. So there are some spaces in semiconductors where I think things are a little bit more rational. Now, to be clear, those names, a lot of the entire space has definitely seen a real uptick and uplift. And so these
yep,
companies trade for a lot higher than they used to. But I would also argue that they all deserve to. They have really good business models that I think that the market has really never given a shit about until super recently. And we're talking about like SOX has been the semiconductor index has been the best performer. I want to say like almost every other decade has been the single best subset sector. Like it outperforms the Nasdaq over a very long period of time, and I think that
okay,
these businesses will probably continue to do that. So
yeah. It seems like just like if you look at the way the world is going, that the semiconductor and the various components that go into it, and the ecosystem around it will just become increasingly important. We're becoming more and more digitized. We're more
yeah,
and more electronic.
yeah.
This whole AI thing, like,
Yeah, man. I like a good example is what and like you have to think about this too. And the nation states care about it a lot as well. One of the
mm,
next big waves of semiconductor demand that a lot of people are thinking about is sovereign AI, meaning that like, essentially Saudi Arabia spends like, billions a year just to like almost like defense spending. Okay. Like that's the best analogy. I think that that's going to be the case to a certain extent. To a certain extent, like let's not forget that Google, right? They just had this giant breach, and what happened was the data breach wasn't for like the search model. I think everyone knows how to do that. Like the data breach was how to make a TPU. They want to know the hardware. The thing that's becoming a bigger differentiator for AI specifically is not how good your models are. Like and to be clear, there is differentiation there, but it's how good the models are made on the hardware. And so the hardware has become this huge differentiator that I think people just didn't care about until very recently. And in almost every aspect of our lives that's going to become more futuristic or technical, semiconductors are going to play a much larger role, right? One of the reasons why we can have driverless cars like Waymo has a chance of working is because there's a crap ton of GPUs in that trunk, actually. So they have a lot of compute in order to figure out computer vision and all these things to make all like the magical technological stuff happen. There's been a one-way train of progress, and that's been more semiconductors. So,
yeah. I feel like an idiot having sold stocks.
dude, honestly, me too. I mean, I'm very levered to semiconductors in my personal business, and I still own some, but like, I don't know. To be clear, the entire space has a way of making you feel like an idiot.
Yeah,
So, truly, what's going to happen is it's going to go up a shit ton, and then one day it's going to start going down. And I mean, I met this guy actually, and he literally just like dollar cost average into Soxel, which is like 3x Sox. Do not do that. That is
yeah, yeah,
extremely bad advice, right? Like that's like hyper risk. But he like just dollar average. He's like, look, man, I knew it was a bad cycle, but talking to you and reading your stuff made me realize like this is going to be more important for a very long time, and these businesses are very good. And that has worked out magnificently for him, I think, in 2023 and 2024. So I think that that's the way to think about it. Is that in this case, right? You can get broad market exposure. Maybe you can have there's like a few of the better companies, I think, but I still think at the end of the day, it's a very secular theme that's going to last for quite some time. And I'm going to put a slight like, pause on this. It's really hot at this exact moment. Like, seriously, I'm literally about to write a note about how it might be a little too hot, like at this exact moment. But
Yep.
if we're talking about a 1 year or a 3 year or 5 year, I do think that there's a real chance that that semiconductors will continue to possibly outperform, if not go into like a full blown AI bubble, and they'll be the real
Yeah.
winner from that. So
Yeah. I feel like, like there's been a lot of talk recently about, oh, we're in a bubble and that sort of thing. And it feels very early if it is a bubble. Like I've got no
It,
idea.
it is
Maybe
it
it
is
is.
it is really early if there is a bubble. I think there's some really good signs in my opinion.
Yeah.
What happens when in a bubble, right, is that the capital markets are not stupid, and pretty much what they'll do is they'll do a lot of IPOs. There's like, oh, there's so much AI demand for these stocks, we're gonna IPO these AI stocks. Okay, um, we haven't seen that, and I also think that you know people are quick to call things a bubble, but a real bubble, like you should. I wrote a piece about this called comparing the 1990s. Like it's like I call them like my history series lessons, and I compare the telecom bubble to now. Dude, they were spending like $300 billion a year on internet stuff. That is 2x higher from AI spending right now, and that's $300 billion in today dollars, I think.
Yeah.
But at the same time, what I'm saying is that if we're gonna go into a real bubble, like there's a lot more fuel to this fire.
Yeah. Cool. So what concerns you about the space? Like just is it just valuations? Like,
Yeah, I think that, well, in this exact moment, just the price action is a little really nutty. I mean, just the rel like, I at this point in time, the only real corollary we have for some of the continued relative outperformance is probably SaaS during 2001. I think that there's a little bit more of a durable story. I think that these businesses are becoming a lot better. I'm actually looking at the stat right now to see if there's what's the relative difference here. But I mean, the relative outperformance compared to the market right now has just been so drastic, and I think that there is a reason that like it could take a little bit of a pause. And to be clear, when I say a pause, I mean like I'm talking like literally March. It's March 7th, 2024, and things are multiple standard deviations away from the norm. If semiconductor if the market takes a little bit of a breather, I'm like, okay, I'm a little less worried. I'm just mostly focused right now on the fact that I think there's an extreme short-term overshoot. Now maybe I'm going to eat crow, and Nvidia is going to be a $3 trillion company tomorrow, but like I just think that more likely than not we're going to get closer to some kind of breather. Stocks can't go parabolic and stay this overbought for so long.
yeah. Yeah. And it's probably healthy if that happens, like
Yes,
if we go
it would be
if we can
really
go
healthy.
sideways for a while. Yeah.
I think it would be really healthy. Like I would be very, because the hotter it runs, the shorter it'll last, right?
Mm. Mm.
And so I
Yeah, and
think
that's
that,
there you go.
well, I think that the digestion will be really healthy for it to set up for multi years.
Yep. Yeah, cool. I feel like I've learned like so much about semiconductors just having this conversation. Like I sort of understood it on one level, but I didn't really understand it. And it's obvious it's a highly kind of specialized space and that you're kind of all over it, and very passionate about it. Like that totally comes through in talking to you, which is really cool.
Yeah, I mean, I just think that, look, man, I quit my job as a buy side analyst because I was like, the semiconductors are such a good trade. I need to write about it. Like that's how I felt about it back then. I still think that that case, to a certain extent, is still correct. These businesses are amazing businesses that were kind of completely left, not left for dead, but taken for granted. And I think that, it is a little bit of a special space, but that's the reason why I specialize in it. And a lot of my customers are, professional investors who are trying to figure out a lot, how to understand the space a lot better, and that's one of the reasons why I have a gig, because I think that there is a lot of value to knowing that right now, and I think that that itself has been a really good or fun journey. So yeah, thanks for having me. By the way, I appreciate this.
Yeah, no, it's been fantastic. So if people have questions or they want to reach out, what's the best way to find you? Just on fabricatedknowledge.com?
Yep. Fabricatedknowledge.com. Maybe just comments on the free stuff, or I don't know, you can respond to an email. That's like one way to do it. But yeah, I think that's the best way to follow my work and my stuff. Is mostly the newsletter is where the majority of my effort and passion is spent upon. So
Yeah, cool. Well, look, thanks so much for coming on the show. I really appreciate it. I hope everyone's enjoyed the show. Once again, Please like and subscribe, follow, all that good stuff, and reach out to Doug, jump on his website and have a look and get a bit more involved and a bit more information about semiconductors. Thanks again, mate. It's been a great chat.
Yeah, thanks for having me.
No worries. See you next time. Cheers.
Cheers.